Welcome to Talk Tickers. Today we're breaking down LyondellBasell's latest earnings call, and wow, it was a real clash of titans. The company's own internal discipline versus some seriously brutal external market pressures. Okay, so here's how we're going to break this down for you. First, we'll look at the results and why those headline numbers were so confusing. Then we'll dig into what management plans to do about it, their big self-help plan. After that, we'll see how the market took all this news, which was, well, a bit of a roller coaster, and we'll wrap it all up with our take on what happens next. All right, let's get right into it. Section 1, the results. And right off the bat, you've got a situation where the revenue number looks good, but yeah, that doesn't even begin to tell the full story. Okay, so just look at these numbers. On the one hand, you see revenue, they beat it. Solid. But then your eyes go down to the earnings per share, the EPS, and yikes. The story just completely flips on its head. We're talking a big loss, whether you're looking at the adjusted number or the official GAAP number. And that is the disconnect that really threw investors for a loop. So let's start with the good part, right? The company brought in almost $7.1 billion. That's a beat of over $250 million. I mean, on the surface, you'd look at that and think, hey, not bad at all. But then you get to the bottom line. And this is where it all falls apart. The company actually lost $140 million. That works out to a GAAP loss of 45 cents a share. I mean, analysts were expecting a profit. So this wasn't just a miss. It was a huge miss. Okay, but it wasn't all doom and gloom. Here's a key bright spot: cash flow. Even while posting that loss, they managed to generate almost $1 billion in cash from their operations. And let me tell you, this became management's mantra throughout the entire call. Look at the cash. Look at the cash. It was their big talking point. All right, so that brings us to their guidance. How are they planning to deal with all this? The CEO himself called this one of the toughest markets he's ever seen in his career. So what's the game plan? The message from the top, from CEO Peter van Deker, was super clear. It was basically, look, it's a storm out there. We can't control the weather, but we can sure as heck control our own ship. It's all about focusing on what they can manage internally. And so they laid out this 3-step self-help plan. It's really a classic playbook for a company in a tough spot like this, especially in a cyclical business like chemicals. You know, you can't force customers to buy more, so you turn inward. Step 1, cut costs, and cut them aggressively. Step 2, don't spend a ton of money on new stuff. Keep that capital expenditure on a tight leash. And step 3, be as smart as you can with taxes. The whole goal: protect the balance sheet, hoard cash, and just survive until things get better. And you could really feel this tension during the Q&A part of the call. It was fascinating. You had analysts asking, hey, what about the dividend? Is it safe? Or when is the market actually going to recover? But every single time, management would just pivot right back to what they could control. It was always, we're focused on our balance sheet, we're being disciplined, we're executing on our $1.3 billion plan. It was like they were talking past each other a little bit. Okay, so that's the story the company told. How did Wall Street react? You have this narrative of internal control versus this massive external uncertainty. And the market's reaction? Well, it was a wild ride. I mean, look at this chart of the trading day. It tells the whole story. The stock actually opened higher. People probably saw that revenue beat and got excited. But then reality set in. It sold off hard, hitting a low of almost 46.80 before clawing back a little to finish the day down almost 2%. Just a total tug-of-war. And it wasn't just a few people trading either. The volume was huge. We're talking 18 million shares traded hands. That's almost double the normal amount. This tells you there were strong opinions on both sides. You had the bulls, who were buying into that self-help story, going head-to-head with the bears, who were just totally spooked by the terrible market conditions. So really, all that crazy price action for the day, it all came down to one single question. Can the company's internal cost-cutting truly be enough to get them through what looks like a long, tough downturn in the chemical industry? And on this day, the market's answer was basically, we have no idea. All right, let's wrap this up. We've looked at the numbers, the strategy, the market reaction. Now it's time to synthesize all that and give you our take on what's next. So the big question is, what's the call on LYB? You've got the ugly earnings miss, you've got this very defensive strategy for management, and you've got a market that seems pretty darn skeptical. So what's our take? Here's the Talk Ticker's verdict. Looking ahead to the next quarter, all eyes are going to be on one thing. Are they making real progress on that $1.3 billion savings plan? We need to see the numbers. For the stock itself, we're calling it a market perform. Here's why. That strong cash flow and cost cutting should put a nice floor under the stock. It's probably not going to collapse. But, and this is a big but, we just don't see any real reason for it to go up in a big way until the whole market for chemicals gets better. It's kind of stuck in neutral.
This is not financial advice.